Since March this year, the StarVault stock has been prepping heavily for its big late-year launch. Technically, the company has never looked stronger than now. But what can we expect to happen up until that big day? And how can we maximize our profits by playing its stock movements like a fiddle? At some point at the end of this year, StarVault will release their new game Mortal Online 2 on the global gaming platform Steam. The exact date is yet to be announced. Now, prior to every historical StarVault launch or hype, the stock price has aggressively built up towards the release dates. And since March this year, we have already begun to see a significant build-up accompanied by record-heavy trading volumes. There is certainly a lot of anticipation on the market, and we do have reason to expect prices to continue to build up before finally surging in a parabolic-like fashion in the last days leading up to the launch. But what price developments can we realistically expect? How should we act upon them? And why does it matter when and how those price developments occur? And most importantly, what are the risks? Well, stay tuned, for we are about to bring clarity to StarVault's pre-launch stock movements. But before anything else, please note that nothing in this episode is financial advice. Everything I say is my own thoughts and conclusions only. And if this episode helps you better understand how to properly strategize StarVault's presumable upside from now on, please like and subscribe, and share it with others who may benefit from this content too. It may not show, but each episode comes together only after excessive hours of sweat, pain, procrastination, and coffee. Your engagement is what drives this channel and brings my pulse back to normal again. And on a final note, I'd like to thank Martin for the insightful comments and for helping me straight out some question marks. Thank you. Now, let's begin with the most important part, the risk. StarVault has struggled all the way back since its 2007 IPO. After that, each hype and launch has been one disappointment after the other, to which the market has reacted by slaughtering the stock price. In September 2013, for example, StarVault announced that they would be launching their game Mortal Online 1 on the world's biggest gaming platform, Steam. This was big news, and the stock responded by rallying 520% on that very day. I still remember it as one of the most thrilling and unreal market days throughout my career. Now, upon the September announcement in 2013, the release date was set not too far into the future. But once the release date came near, StarVault publicly postponed the release date by a few months, as they hadn't completed all the necessary preparations yet. Unfortunately though, it didn't stop there. In total, the release was postponed no less than 6 times. And with each delay, they publicly declared a new official release date. Instead of a few months, it took StarVault 2 full years, until August 2015, before the game went live on Steam. The entire release was an anticlimax, and on the very day, the price plummeted by almost 30%. 3 months after the release date, the stock had lost an additional 2/3 of its value. So, what's my point with this? My point is that Mortal Online 2, or MO2, is StarVault's magnum opus, the project that is more in line with the company's original vision. And if they blow this chance, I strongly doubt the market will give StarVault another chance. For at the end of the day, you can only throw so much good money after bad. But, and this is a big but, if StarVault delivers, if the gaming community takes to MO2, then this could be the beginning of an epic stock ride, not just to the moon, but to the bloody sun. The way I see it, this might be the make it or break it crossroads for StarVault. And I hope they use this moment as an endorphin shot to perform under pressure, or else it might very well be game over. But not only is the game quality of central importance, it is paramount, and I repeat, paramount, that StarVault proves to the rightly so skeptical market that they have matured, that they have learned from their mistakes, and that they can meet their own publicly announced deadlines. For at the end of the day, it's a simple display of professionalism and the fact that the company itself can be trusted. And I hope by God that they have learned from their old mistakes, for if they haven't, chances are they never will. As mentioned, this year's launch is certainly one that has induced a lot of hope amongst the shareholders. And given the technical strength and stock momentum, I do expect a steady price increase with higher lows and higher highs, and at least one parabolic run prior to the release date. In this sense, StarVault is a hugely interesting prospect. The only pre-launch risk, and one that can be of a truly self-sabotaging nature, is if StarVault again were to postpone the release date. In such case, expect StarVault's stock price to freefall and expect whatever original pre-launch stock price potential to be decimated. Just like it was in 2015, as the price didn't even get close to the previous high from the month before, but rather toppled over and died. Now, technically StarVault still looks incredibly strong and promising, and I'm confident in having a big position myself. One thing in particular that speaks in favor for further dramatic upsides is the abnormally heavy trading volumes we have seen over the last few months. This goes on to show the widespread interest and hope in the company, however temporary, and is just the fuel we need for new local highs. For let's face it, without enough buyers in relation to sellers, it doesn't matter one bit how perfectly the technical stars are aligned. That said, I will still treat the stock with the utmost respect, and I will exploit every expected move to add value to my swing strategy. So how then will I play it? Given that things go as planned and that there are no postponements or hiccups, or that the market tanks, which is always a risk, my plan is to release all of my stocks either on the release date or the day before, as whatever price we will see is likely to be a hyped up overreaction. But I'm also looking at adding value to my swing position by exploiting certain moves. In this sense, I'm looking at selling my entire position if and when the price hits certain key resistance levels within certain times. The purpose in such case is to buy back again at a cheaper price and therefore end up with more stocks at no extra cost. We'll get into detail on that in a bit. But first of all, in order to understand the technical map at hand and to structure a proper swing trade game plan, we need to determine what those key resistance levels are. The first thing we will look at is Fibonacci levels. But not only Fib levels, we will be looking at Fib clusters. Now, just as proper RSI usage is much more dynamic than first meets the eye, so too is the use of Fibonacci retracements. The two-dimensional way of using Fib levels is simply by drawing a Fib from a top to a bottom or vice versa and then determining its various levels. A more reliable way of using Fibonacci retracements, however, is by combining Fib levels from different pivot highs and lows to see where certain Fib levels cluster together. Practically, this comes down to the fact that there are buyers and sellers all over the chart who are too affected by future price action. This means that there are year-old bag holders who are subconsciously and unknowingly affected by the Fibonacci levels too, and who will be statistically inclined to sell off at a minimized loss once the stock surges. And as we can see in StarVault, the most significant Fib cluster levels are 0.74, 93, and 103. This means that each Fib level comes with some sort of a resistance, and that they combined constitute a resistance area which can be manifested as a resistance box. And given the heavy trading volumes that are behind this cluster of Fibonacci levels, this box will automatically constitute a significant level of resistance. Moving on to support and resistance lines. 0.50 constitutes a strong level of resistance. We have seen a lot of historical rejections at this very level, where the price time and again has struggled to push through. On the way down, on the other hand, it has offered little or no support at all, the only exception of any relevance being the 2007 dip. Given its seemingly glass ceiling characteristics, I will treat this 0.50 level with the utmost respect. Now, some may protest and say that the local top in July 2018 in itself constitutes a resistance level. I beg to disagree with that, as it was a highly temporary one which also occurred under weak trading volumes. Practically speaking, there are not many old buyers from that level who are waiting to finally sell off at break-even. And what also disregards that level as a resistance of any significance is the fact that they were both wicks. The real area of resistance in that case is the actual closing and opening levels, 38 respectively, which was tested and rejected the other week. However, the next time we retest this level, whenever that might be, I expect us to push through fairly easily. Now, the next important level of resistance after 0.50 is the fib cluster we just talked about, especially the one between 0.80 and 1 krona, as they also coincide with previous closing tops and wicks. These two levels thus automatically constitute levels of resistance on their own. Add to that the significant trading volumes and you will notice that there are plenty of old bag holders who are just waiting for an opportunity to dump their long-time double-digit losses and who will happily settle with break-even. Due to this intense resistance area, I will not keep any of my position above this box whatsoever, not even during a parabolic run. Prices may very well proceed higher eventually, but certainly not without a hefty correction to get new people on board. Things just don't go up without pauses or corrections, however modest those might be. My initial plan was to present the most likely price development scenarios. I had them all written down and prepared, and with an accompanying gaming theory tree diagram where each likely outcome was estimated percentually and summed up mathematically from an expected value point of view, as in how much profits each scenario would return. For by doing this, you can literally calculate what to do and when to do it and leave all emotions aside. In the end, however, I decided to scrap it as it made the episode a bit heavy and number dense. I might do a simplified version of it later to teach you how you can approach an expected parabolic run from a gaming theory perspective. Because extracting maximum value from a parabolic run is anything but easy, quite the opposite. But I still think this episode will get us close enough. For that reason, I don't see the need to go deeper for now. Now, the first thing we need to look at in order to establish a solid swing trading game plan up until the launch is the resistance levels and why they are important. And as mentioned earlier, 0.50 and the fib cluster box between 0.80 and 1 krona are our focus. Now, Starvolt has 200 million stocks. This means that at its current state, the company is valued at 60 million kroner, or 6 million euros equivalent. That is 6 million euros for a company that has made continuous losses and survived on rights issues for 13 years. Reasonable? Not quite. Even if from this day and all the way up to the launch, no news of any fundamental value emerges, the price is still likely to go up. And so too will the company valuation increase, just like prior to any previous hyper launch. This means that if the company is worth 6 million euros today, when we already know the launch is coming, how much then is it reasonable to expect the company to be worth at any point up until the release itself? 10 million? 20? 50? This in itself is of course difficult, if not impossible to tell. But do remember that any breakthrough success for Starvolt, or ultimate failure for that matter, will come after the release date, once we know whether the game is well received or not. In this sense, for the company to go from barely breaking even to being valued at 10 or 20 million euros, Starvolt will need to sell a lot of games. Yet the market already values the company at 6 million euros. All it takes to reach 10 million or 20 million euros is for the stock price to climb to 0.50 and 1 krona respectively. That's not a big leap, but rather a very possible one. Now, the further away we are from the release date, the more sensible the market is likely to be. This is because there is a silent cap of how much the company can be valued at even during a hype. Starvolt would, for example, never ever trade at 5 kronor per stock prior to the launch, as it would be the same as valuating the local ice cream shop at 100 million euros. For that reason, any temporary overvaluation from a fundamental perspective is highly likely to be shot down. That brings us to the question of what a probable highest price scenario is likely to be prior to the launch. If we look at the current price level of around 0.28 and how recently the price was trading just south of 0.50 due to the Cat game launch, and comparing that game to the vast potentials of MO2, we can safely assume that 0.50 is not the silent pre-launch cap. That leaves us with the fib cluster between 0.74 and 1 krona. Here's my prediction. At the launch date, given that it is not postponed and that everything runs smoothly up until that point, I think we stand a predominant chance of testing this territory. My best estimation is that we will push into the early 80 range at least, upon which we may very well be brutally rejected and where the stock might not surprisingly turn into another Eiffel Tower formation. For StarVault has plenty of those before, and each and every one of them related to launches and hypes. Now, for this reason, and regardless of what, I will sell everything I can into this fib cluster whenever it takes place. I will dump my entire position in a heartbeat. For looking at it from a zoomed out perspective, it would amount to StarVault being worth 16 million euros before even knowing whether the game is well received or not. That on its own would be ludicrous. Having said that though, hypes are hypes. Just look at Tesla. Look at the IT bubble or any historical StarVault run and we can quickly conclude that we stand every chance in the world to end up in this resistance box. And the closer to the release date we get, the higher the probability. And that's the key. The closer we get, for I strongly doubt we will see any such Fantasyland prices before the release date is within reach. The way I see it, we can either hover around sideways between around 2025 and 38 for some time until such extreme pre-launch run occurs. Or, more likely, we will, given the very strong technical build-up and momentum that we're already seeing, get an initial test of 0.50 within a not too distant future. Breaking above this level anytime soon, however, or rather any time earlier than 2 weeks before the launch date is very unlikely. 0.50 is a strong key resistance, but yet one towards which all the current technical build-up and momentum push us. For that reason, I would in fact go as far as to say that a test of this resistance would not at all be unreasonable to expect. At least is one that I expect myself, and one that I will sell my entire position into, and buy back again wherever the price finds support and stabilizes, whether that be at 38, 28, 25 or 20. In such case, I will seize the moments to buy back not only my initial position, but also add on new stocks with the swing profits. This would fully equip me for the launch, where I would ideally have increased my position significantly but at no extra cost. Do bear in mind, however, that the closer we get to the release date, especially when we are less than 2 weeks away, I will not sell anything at 0.50 as the chance of breaking that level increases the closer to the release we get. If we for some reason were to break above the 50 resistance level within a month from the release and find support above it, it would be an incredibly bullish case that would increase the likelihood of pre-launch prices up to 1 krona, or a company valuation of 20 million euros equivalent. In such circumstances, I would buy back all of my stocks again at no loss, as my swing sell was around 0.50 anyway. And from a long-term perspective, this would be an incredibly strong case technically for further sustainable price developments. If you believe in the game and the company and you're in it for the long run, this is the scenario you want to see. What you don't want to see for a long-term sustainable price development, however, is for StarVault to test the 0.50 resistance or higher, get rejected and go back to its current base at 0.28 within a couple of weeks from the release date. That would be a strong technical sign of disinterest and faded hype, and the launch itself would likely turn into a fiasco with a lowered silent cap of 0.50 to 0.70 at best. To sum it all up, StarVault shows immense technical strength and momentum, one that very likely will pull us towards the key resistance at 0.50, upon which I will release my entire position unless it's 2 weeks or less from the actual release date. Once the price finds new support, I will use that level to re-enter and buy new stocks with the swing profits. I will repeat this procedure for as many times as the opportunity is given. From this point of view, the ideal situation would be a sideways range between 28, 38 and 50. Using these levels of support and resistance before the launch will equip me to utilize them for swing trades. And once the price enters the fib cluster between 0.74 and 1 krona, I will release my entire position into it. No questions asked. What are your thoughts and your strategy prior to Starvol's launch? Let me know in the comment section below. That was all for now. Thank you and goodbye.